Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the Monday, December the 9th, 2024 Bull versus Bear webinar. Steve Miley here in the call on the call for Trade Day. Welcome everyone. We're going to go for our usual regular run through in here today. We'll take a look at the calendar, what we've had, what we've got coming up. We're going to take a look at our bigger picture, look at the shape of the week as we do on a Monday. So slight difference on the Mondays. We take a look at the shape of the week and we look at what's happened over the past week, what's shaping markets right now, where are the main focal points going to be in this coming week. Why do we do this when we day trade at trade day? Because if we've got a load of volatile points potentially coming up later in the week, it might mean that the start of the week is going to be a little less volatile. And if that's the case, then we may adjust our trading strategies because lower volatility, narrower ranges, slower moving markets. You might adjust slightly your stops, your targets, the way you approach markets, your trading size, because of different potential volatilities. Obviously, we don't know that's going to happen. We can have an idea if we look at what's the potential trigger points for markets as we look into the week. So first of all, we're going to start with the looking back. Now, this doesn't really pick up on the because it was kind of like breaking news yesterday. This was written through Saturday, so he hasn't no mention of Syria in here, but we'll talk about Syria. But there's lots of geopolitical tensions out there at the moment. So we last week we had France, the government collapsed in France, and South Korea. In here also went to martial law, 6 hours of martial law. So there's a lot of confusion still in South Korea and instability there, ongoing instability in France, and obviously the situation in Syria with the toppling of the Assad government in here, and now a bit of a not power vacuum, but the rebels now taking control. So all of that having little impact, though, to be fair, given that this is significant geopolitical changes, France, South Korea, Syria, all around the world. The actual impact net kind of neutral, you would say, and not really having a significant impact on the US indices, which is obviously what most of you are focusing on, US markets. So it's quite interesting in its own right that we haven't seen a flash into safe havens necessarily. We haven't seen a flash into the dollar. We haven't seen a buying of government bonds. Equities haven't sold off, which you would see those kind of moves typically when we have geopolitical risk. Heightened geopolitical risk, which we do have at the moment, but the market's not really reacting, ignoring that. Still in bull mode on stocks. Yields, in fact, anything tracking towards lower yields, not to higher yields in here. So all of that indicating a lack of massive concerns in here regarding those geopolitical tensions. And as US stocks, as we said in here, the Dow Jones actually lagging last week, but as we saw a rotation, growth stocks outperformed significant margin, 5.5% against the strongest performance since March 2023. So a significant outperformance from growth. We spoke about this last week, even from a technical perspective, the Nasdaq taking back leadership, having sort of handed the leadership over to the Dow and the S&P really over the last few weeks, and they're taking back leadership through last week and putting the major markets mostly higher in here. European stock averages and Asia stock averages also moving higher last week. And say those geopolitical tensions, those geopolitical risks, not really both the imposition of martial law in South Korea and the collapse of the French government in here, not having a significant negative impact on stocks. The US employment report on Friday was better than expected in here, but not too much better. This is what we want. So came in at 227,000 jobs added with 215,000 expected in here. Strong recovery from October's relatively low number in here, and all of that is in here. It's kind of not hot, not too hot, not too cold, just about right. If we had a very, 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 very strong jobs report, it could be argued that stocks would have gone down kind of semi-counterintuitively, because a strong jobs report would mean that maybe the Fed wouldn't be so dovish, it wouldn't be so quick to cut rates, and then that would be seen as then kind of negative for stocks. But when we've got a slightly better than expected jobs report, but not too good, then it kind of is good for the economy, showing that the strength of the economy is also then keeping the Fed potentially on track to be continuing with their rate cutting cycle. So that's kind of a not too hot, not too cold, what we say a Goldilocks kind of number coming in on Friday from the US jobs report. So that's all a positive. Powell was on the wires obviously last week. Remember, the Fed go into their blackout period, but Powell's kind of neutral in his when he spoke on Wednesday. We've had some other Fed speakers, Waller in particular in here, tentative indication of support of a 25 basis point cut in this upcoming meeting that we have now next week. Remember the meeting on the 17th and 18th with the decision on the 18th, contingent on incoming data. So we have seen, and we'll come to the CME Fed Watch tool shortly, we have had a heightened a risk from the market perspective. The interest rate curve now pricing in a rate cut, far more chance of it. It's kind of we've got down to almost being like a 50-50 for a rate cut about a week or so ago, and now we're back to like pretty much nailed on that we will get a 25 basis point rate cut. That's what the market's expecting. We'll take a look at that as we come to the CME Fed Watch tool as we move forward. The big focus for this week, remember the rate decision is next week, not this coming week, and the thing that's going to sort of really probably say if we do get that rate cut or not at the December meeting is the US CPI data for November. We get that on this Wednesday, the 11th. So we've got that coming up in a couple of sessions. It's a massive piece of data. All eyes on that. It is expected to actually tick higher. So we actually are expecting an uptick in here. Slightly to 2.7 from 2.6 previously. Core CPI is projected to hold steady at 3.3. So it's got sticky above the Fed's target. Remember, the Fed's target level is 2%. So it's got sticky as it's come down from basically up, if not at, but towards double-digit numbers. We saw 9-10% previously at the high point. We've obviously got down very quickly with the rate hikes that were put in place in here to bring inflation under control, and then we've seen inflation now, but getting sticky as it gets down towards the 2% rate. Nevertheless, the anticipation is that the Fed will likely cut 25 basis points. So if we look into the week ahead, we've already had we've got upcoming. We've got the Reserve Bank of Australia decision on Tuesday, and that's overnight tonight if you're in the US. We get the Bank of Canada on Wednesday, and we get the ECB on Thursday. So it's a busy week for central banks this week. Tonight's, which is Tuesday in Australia, Tuesday, Wednesday and Thursday, the RBA, Reserve Bank of Australia, the Bank of Canada, and the European Central Bank all making their rate decisions this week. The main macro data this week, as we said, is the US CPI data we have on Wednesday, and then we get PPI also, but that doesn't usually have near as much a move, a market moving piece of data. And other than that, for the US, it's fairly light this week. We've already had Japanese GDP, Chinese CPI, PPI. We do have some central bank, so not central bank activity. We have had a stimulus package out of China overnight in here. We'll talk about that shortly. But you can see in most of this in here now, the rest of this is European, Asian data. So Chinese trade report tomorrow, German CPI report tomorrow, the RBA decision. US CPI, the critical piece of data for the week on Wednesday. Remember, that is one of that embargo pieces of data. You cannot trade 2 minutes before or after that data. No trading 2 minutes before or after the US CPI data this Wednesday. Please remember that. Bank of Canada interest rate decision on Wednesday as well. ECB on Thursday, as already said. US PPI on Thursday. And then we end off the week with very little on the US side. US from the UK, GDP, industrial manufacturing, production data plus consumer confidence, and also EU consumer confidence. That's very light, as you can see on the US side. Here's just a summary. Remember, you can access these reports, both the full macro matters report in here, which is the long version, and the short version, the macro summary in here. In the columns below you, the middle column of the three columns, we have the technical analysis, column 1, the macro fundamental analysis, column 2, and on the right hand, the news column, column 3. The middle column is this, the macro data. The macro matters and the macro weekly summary. As I said in here, remember we go into blackout period as of this Saturday just gone. So from 2 days ago, we went into blackout period. So no Fed speakers, no more information from the Fed now until the Thursday after the meeting. So meeting next Wednesday, the 18th, and then we come out of blackout period. So no Fed speakers as going into this week, and they say it's fairly light on the data, apart from a huge piece of data, which is that CPI on Wednesday. You can see in here nothing of note in here coming up as we go into nothing from Europe now to come. Nothing from the US, and we've got overnight, and then you've got that RBA meeting. If you're in the US, it's going to be your evening, but that's actually Tuesday in Australia. Moving on, let's look at the good morning, the morning briefing for the US in here. So the main focus in here is Assad falling, the Assad dynasty falling in Syria. And here, so some global instability, bit of a power vacuum. Where does it go from here? Oil actually gained in here on the back of that. But my market's fairly steady. Global market's fairly steady. Donald Trump has said he has no plans to replace Federal Reserve Chairman Jerome Powell. He does intend to grant pardons to the rioters from the U.S. attack on the U.S. Capitol building back in 2021, and he said that he had an exchange with the Chinese leader Xi Jinping in recent days. He's got a busy weekend. He's meeting Emmanuel Macron and also Zelensky, Ukrainian leader Zelensky, I think this is for the, or maybe it's gone actually. I'm not sure. The reopening of Notre Dame in Paris in here. I think he's attending that. So, but there's nothing in here that's really, despite all this geopolitical stuff we have going on, France, as I say, Syria, and also in South Korea, it's not having a significant impact on markets in here at the moment. The markets, taking it in its stride. Markets keep calm as Syria falls in rush. We've already mentioned that China. So this is the other thing we've seen overnight. We had a positive boost from China overnight in here, bolder stimulus for next year, and maybe to take on the fact that obviously with Trump returning, there's potential for significant tariffs on China. So trying to boost the economy internally with a stimulus package that we've had announced. The China Politburo policy shift spurred surge in stocks and bonds. So Chinese stocks in here higher this morning, but not really because of the backdrop of this geopolitical concerns that we have. We're not seeing that across global stocks in here. So stocks waver as geopolitics temper Chinese-led boost. That's exactly what I've said there, right? So despite the Chinese boost in here and Chinese markets higher, the fact that we've got this power vacuum in Syria, the fact that we've got the confusion and the ongoing political concerns in both France and South Korea in here, all kind of tempering European and Asian stocks outside of the Chinese rally in here. ECB expected easing this week. We are looking for the ECB to cut rates this week, and also potentially for the Fed. We'll come to that when we look at the CME tool. Stocks firm as US upbeat outlook absorbs geopolitical shocks in here. Futures steady as investors focus returns to inflation. That's the CPI data on Wednesday. And if we look on the overnights, you see that massive leap in the Hang Seng Index, reflecting those gains in the China markets in here, up nearly 3% in here overnight. But the Nikkei hardly moving, up a couple of tenths. European stocks mixed in here. The German DAX slightly lower. But both France and the UK in here, the French CAC index and the UK FTSE index up just under 0.5% this morning. And if we turn our attention to US stock indices, little change so far this morning. Slight dip, if anything. They were up earlier, dipping back from making new highs in here. Both the S&P 500 down just under a tenth and the Nasdaq down around 0.2 going into this morning. Here's the CME Fed Watch tool for the meeting that we have next week on the 18th of December. There, and remember, this got down to like 55.45 only about a week and a half ago, and it's been creeping up. And then the end of last week, and after the US data on Friday, leaping higher now to 87%. So pretty much nailing on that we're going to get a rate cut into the end of the year at the meeting next week. If we go to the end of Q1 in here now, you'll see the chances have grown here as well. Now we've got 2 rate cuts in total. So another rate cut expected by March of next year. So we've got the one in at the end of the year, and potentially another one by March. And if we go out to the summer now, I'm going to jump out to July in here. The market pricing 3 rate cuts as the likely into the summer in here, still 3 rate cuts there. And if you go to the end of next year, end of 2025 in here, it's kind of split between either 3 rate cuts or 4 rate cuts as we go through. So 1 rate cut potentially at the end of this year, and then another 3, maybe another 2, maybe 3 next year. Remember, at the 18th of December meeting in here, we not only is now the expectation for a rate cut, we also get the dot plot chart. And the dot plot chart will see the expectations going out into 2025. So we'll get a much clearer picture of what the Fed are thinking next week on after the Fed rate decision, because we also get the dot plot chart. Staying with the bond markets, or staying with the interest rate markets, as in here, looking at the 10-year bond. Oops, I'm jumping this around all over the place. You can see the yields continuing to track lower last week. We broke lower on Friday, slight back up to higher yields, but generally speaking, pointing to lower yields in here. And lower yields, obviously supportive, or not obviously, but they are supportive of stocks in here. So lower yields supporting stocks. And if we look on our, this is the analysis, you get that first column on the left, the daily analysis from the market chartist in here. What we're seeing is the across the board here, the 30-year, the 10-year, the 5-year, the 2-year, we're looking bullish. You can see that big push high we saw after the employment number, higher in price, lower in yield for the 2s and 5s, a big sprint higher for 2s and 5s. 10-year, you can see now flirting with this downtrend line that comes all the way from September in here. So pushing up through there will be a positive signal for price, pushing to lower yields, and that's positive for stocks. On the stocks in here, obviously we made new highs on the Nasdaq, again leading the way higher, making new all-time highs, and the S&P still pointing higher despite the little dips we've seen in this morning. So here's the Nasdaq. We did make further new highs after Friday's highs, further new highs this morning. We had just dipped back down from those highs, and similarly with the for the ES in here, we made new highs on Friday, just about kind of been a bit sideways on the ES, the S&P. For the end of last week, and sideways again in here this morning. Market just marking time. But if we zoom in there on the 30-minute chart, it's high level positive consolidation. Really, it's got a breakdown through on the downside through this 60.75, 60.72 area. Only down through there that makes it look a little bit more negative. And on the Nasdaq, really, it's down through 21.425, only through 21.425 does the Nasdaq start to look a little bit more negative for me, but still looking very positive going into today. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. I'll be back with you. Actually, no, I probably won't be back with you. Likely Duncan will be back with you tomorrow. Now, there's a chance that neither Duncan and I can make the webinar tomorrow, so there may be no webinar tomorrow. If there is going to be no webinar, I'll put a note in here tomorrow. I'll put it in the chat. So if you come on and there's a note in the chat saying no webinar, my apologies. But I'll let you know on that one, closer to unsure as we're going to be able to get to you tomorrow, but hopefully we will. If not, I'm going to wish you all a great trading day for today and tomorrow. I won't be on tomorrow, and I'll certainly be back with you by Wednesday. Until then, have a good one.